Good afternoon, everybody, and welcome to LendIt Fintech's weekly news roundup. My name is Peter Renton, chairman and co-founder of LendIt Fintech, and I'm joined, as always, by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm swell, Peter. How are you?
Swell as well. And we're also joined for the first time by our editor, John White. How are you doing, John?
Very well. I'm just adjusting to the professional microphone, so
yes,
that's very exciting.
It is indeed. So why don't you just give the listeners just the 30-second background about yourself before we kick it off?
Sure. I've been in editorial in news in some fashion for going on 28 years now, and I would say the last 9 have been in fintech. I was the editor of Bankless Times for about 8 years and initially focused on the post-2008 crash situation with alternate finance models like crowdfunding and peer-to-peer lending. And it just kind of has morphed over time into all the various things like crypto and blockchain. So came over from Bankless Times and thrilled to be here.
All right, and we're thrilled to have you. So let's kick it off. A lot of news to get through. I'm going to call this week Jack Dorsey week because it feels like he's been in the news every single day. We started off on Monday morning finding out that maybe he's going to leave Twitter, and then he did actually announce that later that day. And then on, I think it was Wednesday. Was it the Wednesday? I think it was that we found out that Square is going to be renamed to Block because, now Jack Dorsey only has one company to run and he's got a lot of extra time on his hands. So, and we know he's a big crypto fan, but looks like big, not enough big changes, but certainly there's, Square is going to have 100% of Jack Dorsey's attention, it looks like, and it's going to be making some changes.
Well, it's obviously, he's going in the direction of blockchain-based products. I think, what was it? One of their recent earnings, I think it's somewhere in 2020. It accounts for a large majority of their profit.
Mm-hmm.
And that was just Bitcoin trading during the pandemic or, some latter half of 2020. But I mean, it's a natural move for what he's described in terms of blockchain and Bitcoin and the potential that not only the crypto has, but the underlying technology. I'd be curious what other potential products start coming out now that he's only and solely focused on Square or Block, and so it's it's an interesting move. I don't think you will see anything drastically change in the coming months, but in the next couple of years, it'd be curious to see what happens.
How deep do you think he's going to go in? You see the new name Spiral, which has interesting connotations in and of itself. So you're saying a couple of years, you think you'll see some more action beyond just pushing more product?
I think it's going to be quicker than that. I mean, if you follow Jack's Twitter stream, which I don't read every tweet he does, but he's a Bitcoin fanboy. He just thinks it's the best technology. I think, and it says here, it says in the articles that we read this week that Square Crypto, which is a separate part of the company, which is focused on Bitcoin. And not just it's really fit Bitcoin. It's not Ethereum. It's not Ripple. It's Bitcoin. And that's what's changing its name to Spiral. So I think it's really Bitcoin is going to become very integral in Square's future. I have a sense.
Yeah, I mean, the natural next step would probably be accepting Bitcoin as a payment. On the Square. I don't know, but in the Square ecosystem, I'll say, because I don't know how many people, the dongle versus the reader and stuff like that. But I can see that in probably the shortest amount of time in terms of some of the stuff that they're probably working on.
Do you see Square pushing into the super app space?
Well, it's a good question.
I'll let you know when someone becomes a super app.
Yeah. Well, I feel like I think Cash App is sort of that's probably I mean, some would argue it's already got some of the elements of a super app. I don't know if it's fully there yet, but they're doing it's going to be doing a lot more there. And just to the previous point, I think I'll be shocked if Square doesn't accept Bitcoin as payment before the end of next year. I think it's really going to be going to become part. I mean, they're going to. I mean, they're going to have their own wallet. They're going to have. I'm sure they're going to offer merchants the ability to just basically exchange Bitcoin to Bitcoin.
Do you think his potential biggest impact could be, can he get the right group of people or companies together to make a real regulatory push in terms of clarity? Like, does he have the cachet to say, hey guys, like we need to coalesce, we need to come together, and we need to push the regulators to actually, like, hey, here's the lines, here's the borders, this is what you're allowed and not allowed to do?
I don't know. I mean, it's.
I don't think he does.
Yeah.
I'm bringing it up as a, kind of just a
Like if he
existential
could,
question, but
if he could get the other leaders, like the other like Coinbase, Robinhood, all the big, FTX, all the big players, if you can bring them all together and have a unified front, maybe. But I know there is a hearing next week, which we'll be paying close attention to, where the House Financial Services Committee has invited the CEOs of many of the leading crypto companies together. So we'll see.
I'm sure you'll get a lot of great questions out of that hearing.
Yeah. Yes. Okay. So we could talk about Square for the whole hour, but we're not half hour. We're not going to. We're going to move on to my favorite topic: overdraft fees. We have.
Has this been a record? How long there's been a gap between the last time we talked about overdraft?
It's been distressing. I think it's been like 6 weeks since we last chatted about overdraft fees. It's.
Do you have a Google News alert for overdraft?
I actually don't have a news alert for it. I should, but anyway, Capital One came out this week saying that they are going to eliminate all overdraft fees. $150 million of annual revenue gone. And this is the biggest bank so far to really eliminate it outright. And others like PNC have said, we're giving people 24 hours notice. We're gonna reducing the amount of times that people overdraw their accounts. But this is going cold turkey, and they're still going to have overdraft protection. For most, you got to have your direct deposit going in there, which I think that's true for most companies. But they're going to have similar to what Chime and many others have. Dave, I think Dave was the pioneer of this whole product, really, and changed a lot. And I've actually got Dave, the CEO of Dave, on my podcast tomorrow. But anyway, I think this is really good news. What do you guys think?
It's one step closer. So they're a top 11 bank. They're right outside the top 10 by assets, according to, I think, September's Federal Reserve data. And so it's getting closer. The real catalyst, if you want most of the industry to change in a huge way, it's obviously JP Morgan.
Yeah.
But when JP Morgan sees a Capital One size bank who's got almost 400 billion in assets say we're willing to forego 150 million a year, then the conversation just keeps pushing in that direction. And I think the article that we linked to in the show notes is the CNBC one, which has the clip when Jamie Dimon and Elizabeth Warren were arguing about this topic back in May. So I mean, to me, at this stage, it's inevitable that it becomes outlawed to a point where it's not going to be 35 or 25 per item.
Do we think this was a response to Chime's model, or just competitiveness in general?
Yeah, I think it's a response. I really do. I think, and Dave started this all. So it was Dave was the first. Chime copied pretty quickly. Several others have I mean, Varo's got their own version of it. There's many of them. Interestingly, SoFi does not. I don't believe, but I think it's competitive pressures from the fintechs.
What was the podcast that it was? It Aaron Klein, your podcast?
Yeah.
If you want a primer on um, the um, the reliance of, in particular, small banks, how much they rely on fee revenue, listen to Peter's podcast with Aaron Klein for a shameful plug here, because
It's not shameful at all.
it's
No.
But the big thing is it's opposite. The small banks are the ones that really rely on it to make profit. The big banks, there's a reason why Capital One can say, I'll forego 150 million a year, because chances are they can make it up elsewhere.
Right.
But does the national, I think, Bank of Omaha, Nebraska in Lincoln, I'm making that bank up, obviously, but does that small bank, is it able to make up for when they make the switch? And so you're still going to see a large majority of the small banks who actually gouge the customers more still keep it, I think, for a little while longer, banking on the fact that their little small communities are not as in tune with a big branch Chase Capital One type of customer.
Yeah.
Eventually it gets to them, but I think they'll be the holdouts just because they rely so much on the revenue.
Yeah, and they're not. And this is always my goal here, or my hope, I should say, was that it would be overdraft fees would be removed through competitive pressures rather than legislation. And I think it's not going to be legislated now. I don't think. But
I don't know. Do you think they need to legislate out the smaller banks?
I don't know. I think the competitive pressures eventually, if when Chase and Bank of America and Wells and Citi all come out and do this, it's going to put a lot of pressure on these small banks that are relying on this. I mean, overdraft fees, they're probably going to be around in a decade, probably even 2 decades, but they will be they won't be $20 billion a year or whatever the number is.
I think it was 35 billion.
Yeah, they'll be $1 billion a year, something like that. So anyway, and we're running behind here because there's just so many interesting things to talk about when it comes to overdraft fees and, of course, Jack Dorsey. But I want to talk about New York Community Bank. Now, I'll be honest, I actually didn't know much about this bank at all. And their name is New York Community Bank, but they're barely a community bank. I mean, they're based in the financial capital of the world, and they have $57 billion in assets. So that's pretty decent size. But they have partnered with Figure. A good friend, Mike Cagney, is partnering with Figure, and they are now minting stable coins. And I actually didn't know if this was legal, but they've certainly, it's all out there in the open. But they have a joint venture with Figure. It's all happening on the Provenance blockchain, obviously, which is the Figure's blockchain.
Do we know if they hold it on their balance sheet?
I don't think they probably don't. That's why it's probably. I don't think that's legal yet to hold the stable coins on your balance sheet. But
I mean, I think that the quote that the NYCB, I forget his title, but if NYCB and other banks don't lean into that and become part of it, they're going to be excluded from it and potentially become a dinosaur in terms of leaning into new tech and blockchain. Now, not every bank's obviously going to go this route of blockchain and minting stablecoins. But just a larger point, they need to lean into technology. Going back to our previous topic of the, making up for shortfalls in revenue, these banks need to do something else, or you're going to see enormous amounts of pressure on M&A in the banking sector that we probably haven't seen in like a half a century.
Right.
I saw an article today that was interesting. It talked about one of the opportunities for smaller banks is to be the help desk for people to get into fintech through their bank. So they could then become the information broker as much as they are a commodity broker.
Right.
That was fascinating.
It still surprises me. There's only like a cabal of like 15 quote unquote fintech banks. There should be like 150 or 200 at this stage.
Well, we're getting there. I think
slowly.
We're getting there. It's and the thing is that it's all converging, because I mean, now even our little community bank in Denver, which it's a small bank. Its app is adequate. It's totally fine for most purposes. We can deposit checks. We can put quite large checks now into on a mobile phone. So really, I feel like the technology from regular banks is becoming better and better and better. Again, driven by the changes in that fintech has made. So, but the thing that's interesting about this is, like what they said, Mike Cagney is working with the New York Community Bank and a consortium of other banks. And what that's going to mean is when someone is trying to send money between these other any of these other member of the consortium, it's going to be instant settlement. So you'll be able to literally be on your screen, send money to pay somebody who's a customer of another bank. They'll be able to see it on their screen, instantly, within seconds, most likely. And
it's like a smaller version of the Chase one, right? The IIN, the Inter something network. The Chase has like 100+ banks on it, and they can, I think it's near real-time settlement.
Yep.
Based on blockchain.
Yep. So this is I think we get like, it's funny because you've got FedNow coming in the background, which is the instant payment for everybody. But
by the time FedNow gets here, blockchain's going to zip right past it.
Exactly. Anyway, let's move on. I want to talk about Facebook. Like, it's not really about Facebook, Meta, I should say. David Marcus, who has been leading their crypto efforts from day one, announced he's leaving the company, and he. It doesn't say why or where he's going. He's just, he basically said that it's time for something new. And I always think, like, it's funny because Facebook announced this thing. The whole thing's been a bit of a cluster. It's gone from Libra to Diem to Novi. Regulators hate it, and they even lost some of their original partners that got cold feet. And now, like, the Novi digital wallet is supposedly in beta, and there are people using it. But it's just, there's been lots of false starts. Not a surprise, I don't think. But I'd say it's a big blow to Facebook.
I think it's a significant blow to Facebook. I mean, I think he's clearly, if you read his quotes coming out of it, is something along the lines of the entrepreneurial, like, itch. There's only so long as I can't go ahead and start my own venture. So it sounds like he's got something in the works. But I mean, you said it, Peter. They bungled it from the start. It's like they never thought to talk to regulators before launching this. They launched it with this great consortium of companies, like a third of them, after which dropped out within like the first few weeks when regulators are like, what the hell is this? And then from there, it's just been, all right, we're going to incorporate in Switzerland. Nope, we're not going to do that. We're going to name it Libra. Nope, we're not going to do that. It's like, and I don't think it's an indictment on David Marcus. I think it's more an indictment on the overall thinking from the Facebook hierarchy. Like,
I think it's Zuckerberg.
We could just launch this.
To blame, I think.
Yeah.
So my question is, how long till he starts his own company? And I would imagine Facebook's non-compete would be rather extensive.
Yeah, I think it sounds like there's a lot, crypto's a pretty broad space. So as long as he doesn't do that, I mean, who knows? But I don't think he would have quit. I mean, I'm guessing he's already started his company at least, he might not have officially incorporated anything, but I'm guessing
on napkins so far.
Exactly. But I think it may not be, I don't think it's going to be, cross-border payments or anything just exactly the same, or even a digital wallet necessarily. But you just go out to some of the DeFi projects that are happening that are, there's a broad scope for him to do some interesting things. And he can, he'll be able to start a company, raise as much money as he wants, and go off to the races. He'll be able to hire people. I think people don't blame him for any of the bad things that have happened.
Yeah, he's got a very, very strong, from what I can tell, at least obviously from an outsider, very strong reputation. And I would gather before the end of next year, he'll probably have raised 1 or 2 rounds of capital.
And he'll have a unicorn on his hands.
20, 30, 40, 50 million, somewhere in that range, between like 20 and 50 million.
Or maybe JP Morgan picks him up.
Yeah, well, that would be unlikely. It's I mean,
You can dare to
you never
dream.
know.
Dare
If
to
you
dream.
if you you know if you pay a guy enough money and give him enough stock, maybe.
Remember, JP got rid of what's her name? It was the woman that started a lot of the digital
Oh,
asset
yeah.
and crypto.
Yeah.
I forget her name.
I
She's
forget
very,
her.
very popular in the crypto space. She was kind of a favorite of a lot of people, especially because she had, she kind of got her initial success, I think, in the banking space, which was like, whoa, what's going on here? And then,
Right.
she left to start her own thing.
Anyway, let's move on. I want to talk about an article on SoFi in the information this week. I put this out there because I learned a lot from this article. I was surprised by a few things. Firstly, the $400 million price tag on SoFi Stadium is what we've all, that was what was shared initially, and now it's apparently 625 million, not 400 million over 2 decades. And so that was news to me. And then I didn't realize there was internal conflicts inside SoFi about what they are going to deem as a member. And it's basically anyone who's using anything in SoFi who's, even if it's a free service. So that they've got now 2.9 million members, which is in a broad definition of that. And I think so. SoFi have and they rehashed a lot of the old stuff which we all knew, but I feel like Anthony Noto is leading the charge, and a lot of it is a biography about Anthony Noto. You learn about his Army days, his football days when he was playing for Army as a linebacker, and it really it's worth a read. I recommend for anybody who wants to delve a bit deeper into SoFi.
What is the second product he's speaking of?
Well, the whole thing about I've listened to his earnings calls, and he talks about we want people to have multiple SoFi products. So whatever the product is, whether it could be a student loan, could be SoFi Money,
Oh, I got it.
SoFi Invest, whatever they have, they want them to have a second product, and that's a metric that they actually share. And so the second product is a big. So that's what he's saying is, like, even if they've got a free product like the credit monitoring service that they offer, as long as if they can do a second product, that then becomes, once they got a second product, they're more wedded to SoFi.
Right. And they become more attached to the brand and more loyal.
Well, I have 2 SoFi products, and I wouldn't say I'm attached to the brand. But
it's just the whole who's a member, and it's like this game that companies have always played. Monthly active user. If you log in once for 18 seconds in September, then you're a monthly active user till December or something. It's like, it's sometimes it just seems silly.
I mean, that's why. I mean, what they, I mean, at least with that's what, like, you hear some of the digital banks, it's measuring downloads. How many people have downloaded the app? Well, you can download the app and never use it. You're not really a user. But, anyway.
The decision to invest in the SoFi name on the stadium was, without a doubt, just a genius move.
Yeah, no, I think it's even with the extra money. I was skeptical at the start, but now we've had 1.5 football seasons with that stadium, and they've had some big concerts there.
The Super Bowl is there.
Super Bowl is there. I mean,
that's it. Yeah, you paid for it right there with the Super Bowl being there. You're going to hear it 1,000 times in the month of January.
Yep.
And the fact that it's 2 teams playing there was brilliant.
Yes. Anyway, I want to move on to fundraising. Just talk about a couple of fundraising rounds. Thought Machine, we've had them at our event in the UK a few times, and they're a UK company, but really expanding globally and really here in the US pretty seriously. They famously have nabbed JP Morgan as a client, and then JP Morgan are now investing. Interestingly, it's got this $200 million Series C, which makes them a unicorn, was led by Nike Partners, pretty famous VC, but then Standard Chartered, ING, JP Morgan Chase all participated in the round. And so they're really, I mean, this is a company that is making serious headway at some of the biggest banks in the world.
They have a pretty bold objective to eradicate legacy technology from the industry.
Yeah, I think it's bold, and I think it's doable. I mean, it's not going to be done probably this decade, but that's eventually they've got to, every banker's just got to get rid of the old code.
Yeah.
There
50
won't be any
years.
COBOL programmers left.
Fortran.
It'll be they'll rid it of in banking, and I'd probably say 30 years.
30 years?
Yeah.
My goodness.
Remember,
I learned COBOL in my
of this
undergrad in the 80s, and they stopped teaching COBOL soon after I graduated. And this was, so people my age and older, I know friends of mine who are still doing COBOL programming back in Australia and earning a boatload because there's so few of us.
But you got to think, the banks have then built on top of this.
Yep.
So
Yeah, it's all Frankenstein code.
They've made the spaghetti so much worse that to get themselves out of that, it's not going to be easy.
No, but I think Thought Machine seems like they've got a really good solution that banks like, and so I think we'll see. I think your 30 years might be a bit too pessimistic, Todd, but we'll see.
The first one to crack the code is going to be the standard.
Yep. So next fundraise from Fundbox, also a new unicorn here. Congratulations to our friends at Fundbox. Really like those guys, and they have $100 million Series D, now a $1.1 billion valuation. Led by some north of the border investor, the healthcare of Ontario
Canada
pension plan. I mean, it's really I'd never heard of this investor before. Obviously, they've got a big.
It's one of the big ones, and the Toronto teachers pension plan is another big one.
Okay, well, they obviously have a venture capital arm now, and
and
they've invested in Fundbox, and they've I think Fundbox is still they're not a big company. They got 300 people, and they're growing, and they've crossed $100 million annual run rate in revenue. But I really think they got interesting products, and they're a company to watch.
And they are sponsoring a track at USA 22.
Oh,
just for a shameless plug, which is coming up May 25th, 26th in New York City.
Indeed. Okay, last item on our roundup this week: Nubank. Nubank, the famous Brazilian digital bank, the largest digital bank on the planet by a considerable margin when it comes to number of real customers, and they are.
That seems like a shot.
Well, these are piece of people that actually have an account.
Who's that more shot at?
I don't know.
SoFi or China?
Yeah. No comment.
No comment on that whatsoever. But there was news this week that they're going out with a slightly lower valuation. Where people were talking 50, 55 billion, and now it's looking like 42. It's still a fantastic valuation. Still
terrible news. That company is totally screwed.
Yes, and they said that it was due to current conditions in the market, and we have seen a bit of a tech pullback the last few days. So, regardless, if they can successfully pull off a $42 billion valuation, it will be the largest fintech IPO in history, and they're going public supposedly on December 8th is what the date they have given us. And
fingers crossed.
Yep. We will see about that.
Good timing for us.
It will be because December 7th and 8th, we are focused on LATAM 100%. We are in Miami for our LATAM event. We tried to get someone from Nubank to come speak, but clearly it wouldn't have worked out anyway. And maybe that's what they knew, that
too distracted.
They're a bit busy with their IPO. Just one last thing before I get your comments is that $716 million in revenue in the first 6 months of the year. That's way more than any US fintech, I would argue, maybe with the exception of like a Square or a PayPal or something like that, but really impressive numbers.
They don't really spend money. Oh, they might spend some on marketing now, but their whole shtick was not to spend money on marketing, right?
Yep.
Because their customer acquisition cost was kind of
$5. $5
exactly. Compared to other fintechs, through the floor.
Some fintechs are happy with $500.
Yeah, especially in the
wow.
lending space.
That's incredible.
They are an incredible company, New Bank.
By the way, Amber Balday.
Amber
Oh.
Balday. Ah, right.
A
Yes.
callback to earlier.
That was
Okay.
a JP Morgan.
So is the new bank, is their experience with that kind of revenue in Brazil scalable to other areas, or is that lightning in a bottle?
Well, I think it's certainly scalable to other areas in Latin America. They're already in Mexico. They're going into Colombia. I think there's a lot of Latin American economies, while very different, are very poorly served by on the oligopolies that are the large banks. Usually, most of these countries have 3 or 4 large banks. They're terrible. They're very profitable, but serve their customers poorly. And so, New Bank, I think, is going to be. I mean, they are going to be expanding throughout the region, I would expect.
in many ways, they are 5, 6, even 10 times more profitable than their U.S. counterparts. So the banking business, as it currently stands, is something that they are not looking to change, which is also plays into the hands of New Bank and other fintechs, that they're well positioned to acquire these customers, especially in LATAM, where a lot of people are not in the system yet.
Yep. Yeah, and they're going to raise, looks like, somewhere around $2 billion from this IPO. So they're going to have a pretty big war chest.
Not too shabby.
Anyway, we are out of time. Thank you, everyone, for watching or listening. Thank you, Todd. Thank you, John. We'll be back next week. We'll be actually bringing this to you. I'll still be in Miami because it'll be the day after our Latin American event. I don't know if Todd, you might be back in New York.
I will be where you see me today at my home office.
Anyway, we'll have some more LATAM news next week, I expect.
Yes, very much a LATAM focused news show.
Okay, that's a wrap. Thanks, everybody.
Adios.
Bye.
Bye.